Good
Look
morning.
at that Paramount title team. Oh my gosh. Hi, Misty. Hi, Megan. Hi, India. Hey, while we're just starting, before I get to the agenda, you guys want to kind of brag, Misty. You probably built the best closing team we've ever had, right?
I think so, yes.
Why don't we just jump ahead of the agenda and give a little introduction so you guys can get back to work? Because it's the end of the month and we have
Okay,
126
yes, that
closings
sounds
to go.
All right, awesome. So I just wanted to put some faces with the names because sometimes it's, you get to talk to them on the phone, just want you guys to have an introduction, know what they look like, know who you're talking to. But we do have some really good powerhouse teams now. All of them come with title experience, which I know you guys know India. She's been here the longest. So, so this is India.
Morning.
All four.
You'd be a miracle.
Yes, she is a little miracle. And her processor is Amy Gilmore. So this
Hi,
is Amy
Amy.
back here.
Morning.
This is Chris Dillamone. She answers our phone. She's our CSR. And then this is Megan Duquette. And then Victoria could not join us this morning. She's at another office helping out, but she is awesome. She comes with title experience. She is a full-time processor for Paramount. So you guys will really like her as well. She's all about the customer service, getting back with your clients, just making sure that we are following up on phone calls, grabbing all of your phone calls. And if you aren't feeling that, we are meeting those needs, please call me. Most of you have my cell phone numbers and I answer right away. And if I don't, I get right back with you.
That's all we can do, Misty. The problems come up and we all make them and we have to address them, face them and move on. And sometimes that happens and you guys are really responsive. Something goes out of whack, I call you guys and boom. I know India, you came in the next morning and jumped right on it, boom, boom, boom. And that's kind of the benefit of having a affiliated business, right? It's not that, this is discounted rates or anything. It's customer service. It's on the ball. We need something done. We go straight to you and you get it done for us. So, but we talked last week. We talk every couple of weeks about just the business in general. And you were just so proud of your team. I said, let's get everybody on one piece so we can see it. Because this is not a Mickey Mouse remote back office title company, right? And kudos to you because hiring in this market is very difficult. And hiring for the title industry itself is very difficult and to find people with experience. So I think collectively, we as a team need to work together. We support you, you support us, and mutual respect goes both ways. So thank you for your time today.
Thank you, Craig.
Thank
Thank you.
Cool. All right, I'm going to share my screen and get started. And let's just jump. All right, these are some good quotes today. So I don't know if you guys like this or not, but we're nearly halfway through the year, and I'm hoping that each of you is nearing the halfway point for your production goals for 2022. Yes, the market is changing. It always does. Let's see if these quotes can keep you on track to achieve the goals you've set, right? Is a changing market a bad market?
No.
No. The weather changes. Is it bad? No. I don't care who's doing better than myself. I'm doing better than I was last year. It's me versus me. I think that's really important because if you go down to the basics, and next month we're going to talk about this, it's your primary aim. And Joe, yours is different than Crystal's, and Crystal's is different than Chris's, and Chris's is different than Jimmy's, and everybody's got a different thing. So if you're measuring yourself against Chris, it doesn't make sense, right? You got to measure against yourself because we all have different goals. You can't have $1 million dream with a minimum wage work ethic. It's so funny. I just got back from the Bahamas and I just absolutely love the Bahamian people. I mean, they're just so nice and so friendly and so friggin' lazy. It's amazing. I was able to find a boat. There was no boats for rent. So there's no house. The whole place is full. And I got a boat from some crazy way. And anyway, they put a brand new Bimini top on it. Backwards. I just, rather than just take it off and put it on right. It's just, there's no problem, right? You can't have $1 million dream with a minimum wage work ethic. And that's one of the things that holds people back. If you do crappy work, you're not going to reach your goals. So it's just pay attention. We got a big thing coming up for you on Wednesday and Thursday to get back into this market strong with buyers and listings. And it's going to be advice that you may not like, but it's going to work. Number 3, many people will panic to find a charger before their phone dies, but they won't panic to find a plan before their dream dies. God, it's amazing. It's on the airplane. Everybody's on the phone. On the ferry, everybody's on the phone. In the restaurant, everybody's on their phone. The whole world is just on their phone. Crazy. If you want to change your life, you have to start by changing your thoughts. Very true. Hey, I'm going to share, write down this one, a book with you. My daughter Jessica shared it with me, and I've read it almost twice now on this trip. It's called You Happier. He's a psychologist and a brain doctor. And he talks about the different brain types and how they get treated differently and the different thoughts. And you've got a persistent brain type, you've got a cautious brain type, you've got a blended brain type. And it's really fascinating. If you like that type of stuff, You Happier, his name's Dr. Amen, really good. But you got to start by changing your thoughts. And there's a lot of thoughts I'm changing as a result of that book. So if you guys like that stuff, write that one down. Number 5, the key is not to prioritize what's on your schedule, but to schedule your priorities. There's a big paradigm shift in that one, because I'm one of those guys that lives by my calendar, but my calendar gets filled by other people. So what I need to do is put my priorities in my calendar, everything else go around what I want to do, right? Have a great week with Mike Ferry. There we go. All right, here we are. Listings up 158 from 145. No big anomalies this week. So that's a good sign, guys, right? Houses, it's much easier for us to not have to sell a house in 3 days when we can wait 8 or 9, right? And remember, a balanced market is 6 months. So we're not talking about stress. New listings this month, 79, 14 are pending. Let's talk about seller we did last week. Sales month to date, we have 110 sales so far for $1.6 million. And we've got closings of 104 so far for $1.2 million. And pending to close, we have 127 more. Now, guys, this is May 24th. May 24th to May 3rd, 8 days. So we have 127 closings in 8 days. That's 15.875 closings a day. Typical closing takes an hour. So that's we have to work 15.87 hours a day for the next 8 days to get all these closings done. I know there's more title companies involved, but you get the point. I'm just going to say it again because I say it a lot. You're stressing your customers, you're stressing the title companies, you're stressing the lenders, you're stressing the loan processors, everybody by putting them all toward the end of the month. Very difficult. Is Samantha on board? I don't see a Sam. I want to know if we had a little social media contest update.
I don't see her.
I don't see her either. Okay, we did Paramount Title. Mr. Baggins, my brother, are you online? There he is. In static form.
I'm in, but give me 10 minutes and come back to me a little bit later.
Okay. Jeff wants to give us an update on the beach projects. Well, then let's hear from our management at Local Stats. Before we do that, I'm going to share this. This is going to be my market update. And it's fascinating to me. Home value growth has shifted to the suburbs in recent months. This is from Zillow. Home value growth in rural, suburban, and urban zip codes. So rural, I'm surprised, has fallen down. That's surprising to me because I thought we were doing more in the rural areas. Urban, but look at suburban. They're leaving the urban areas and going into the suburbs. So that was interesting. The typical suburban home gained value, more value over the past year than the typical urban home. That's a reversal from previous norms and from the first 15 months of the pandemic. Many buyers are prioritizing affordability and space over proximity to the workplace, with remote work now an option for more households. Makes sense? In some markets, such as Seattle and New York, where urban home values are much higher than home values in the suburbs, demand is starting to shift back nearer to city centers as the trade-off in affordability from living in the suburbs is no longer as significant because the prices are dropping, right? Interesting. The housing market is as competitive, not crazy, as ever, despite soaring costs. That's bizarre, right? You would think prices going high would slow down the market. You think interest rates going high would slow down the market, but read on. This is back in 2018. There's 1.5 million, over 1.5 million homes for sale. And then we jutted up and we jutted down, and now we're down to 798,000 homes for sale. Year over year, we're down 19.5%. US home values continue to grow at a record pace, up 20.9% in the past year. The combination of rising prices and a spike in mortgage rates means that the monthly mortgage payment on the typical home is 52.5% higher than it would have been a year ago. That's stunning, right? And that's why I say, if you own a home now, and then this is the advice I'd be giving a customer of yours. If you own a home now with a 3.5% fixed interest rate, you don't sell that sucker. You keep it, put a tenant in it, let them pay off your mortgage for you. Because if you sell that house or get a home equity loan on it and make that a down payment on another house, move out and get a bigger house if you want, but don't sell that little one with a fixed mortgage. You're going to kill yourself. You're going to kick yourself later. Rising costs have not yet eased competition. Homes are selling as fast as they ever have after only 7 days for the typical home, and nearly half of all homes are selling for above their list price. This is not Joe. You've got an MBA.
Yeah.
When you raise prices and you raise interest rates, typically you slow down sales.
Right.
What the hell is going on?
Demand.
You can't fight master demand.
You can't fight the demand. People are wanting to be out of wherever they are.
Mm-hmm.
And you've got a lot of people my age that are checking out, cashing out their house and retiring and moving, and they don't want to be where they are. So, most of my sales last year were from people from away. They weren't from here.
Yeah, you do a lot of relocation too.
Yeah.
But even the local people are moving around.
Right.
NAR, National Existing Home Sales, Zillow's housing market outlook has been revised down from April. Zillow's forecasting an 11.6% home value growth over the next 12 months. Oh my God, Chris Reed, what would the media say about that?
You're saying Zillow's forecast of a 6.4% decrease. Whoa, home prices are going to drop by 6%. Get out now. Oh my God, run for cover. That's what the headlines would say.
Yeah, but what the article says is homes are only going to go up 11% this year instead of 20%.
Yep.
Joe, would you buy a house this year if you knew it was going to go up 11%?
Sure. If I needed one.
And guys, I want you all to get this through your head. When I buy a $400,000 house and I put 20% down, how much cash did I use? $80,000. When a $400,000 house goes up 11%, how much does it go up? $44,000.
Yeah.
So my return is $44,000 on how much cash? $80,000. So what percentage return is that?
50%.
It's greater than 50%.
Yeah.
Right. So people don't think that. And this is where you guys as agents in the marketplace have to, what do you say, Jeff? Control the narrative. That story is so simple. That math, you can't do that math. You need to check out and go back and find another job. Right.
The downside is
20% down.
that's what everybody sees Zillow. That's what most people are using as their source, and then social media. And then people share that onto their social media. So Zillow is the end all be all. Zillow says home prices are falling.
No, Zillow says home prices are not rising as fast as they were.
Right.
But that's the conception and the perception is home
Yes, I
prices
agree.
are falling.
That's why we have to control the narrative and restate it in another way.
I think it's what you explained, Craig. We had 2% increase per month last year. So this year they're talking about 1% per month, right? Almost 12%.
That's a 50% decline, Joe.
Yeah, but if you look at the housing market over 50 years, it's roughly 5% per year.
Right.
Okay, so we're still in a hyperinflated market.
We are. And Zillow's predicting 5.73 million existing home sales in 2022, according to their latest forecast, a 6.4% decrease from 2021. Oh my God, Zillow says the market's crashing. We're at 6%, 6.4% sales. It's an example. I had this crazy example. If you have a balloon and you blow it up to its max capacity before it pops, right? And that's 6.1 million home sales. and you had another balloon and you blow it up to 5.7 million home sales, it's still a really big balloon. It's not as big, but it's not as close to busting either. I don't know. I just made that up. It sounded good in my head. Mortgage rates declined slightly, but hikes are expected. Headline: mortgage rates declined slightly last week, but are still more than 2 percentage points higher than a year ago. Price data released last week showed persistent inflation in many areas of the economy, but interest rates did not move higher on this news as the Federal Reserve affirmed market expectations for 50 basis point rate hikes at the next two meetings for the Federal Open Market Committee. With continued market volatility, investors appeared to shift to a risk-off mode. I'm not sure what that means, with equity prices declining and US Treasury yields moving lower. So
Risk, probably they're talking about they're moving from equities, so stocks to bonds.
okay. Which makes sense because it's not very attractive watching the stock market do this.
Oh, it's
All
not.
So guys, this is it. We're in this market now. We're going to have slowing growth, but still growth, right? Strong growth. We'd be very happy with this growth last year, but we're really happy we had 20% growth, but now we're going to have 11% growth. And instead of 6.1 million home sales, we're going to have 5.7 million home sales. But in the crash, we had 4.2 million home sales. So tell that story. Market up from 4.2 million to 5.7 million home sales. Same story, different words. Interesting. Okay, so management. Let's do a little market. I just kind of pick off and come up with something market-wise. Who wants to start?
I can start.
Chris is on my upper left. We'll let him go first.
We'll let him go.
Thank you. I appreciate you letting me go first.
It's a credit.
I'm going to share screen really quick. And what I did is
Oh,
I just went to and did the same stats we did last week. And what I'm going to do is if we continue on this trend, I'll do it on this meeting. If not, I'm going to do it in our local meeting, just so we can show from week to week what's going on inside the Apollo Beach market as one example. So we can see that just because it's in one zip code, it doesn't dictate a market. So what's going on all around us may not be going on right inside our market. So if we look at the actives, obviously are green, the pendings are orange, and the solds are red. From last week, there were 73 actives on the market, and there are currently 68 actives on the market. Of those, 47% of those listings are listed under 2.5%, 41% are at 2.5%, 12% are offering 3% or more. Of the pending.
let's talk about that, Chris, because this started off with me saying, stop it. We're not cutting our commissions. We charge 3%, and we want you to co-broke at prevailing rate in the market. So we came up with this little example that we're doing sort of last week. This is the definition of prevailing rate, right? Whatever most sellers are offering, it would be prevailing.
Mhm.
So 47% is less than half. So 2.5 is not prevailing. Or, well, I guess we could define that a couple of different ways. It looks like 41% are offering 2.5.
Yes.
So that would be the prevailing rate because there's no other rate that's closer than that. But just
No.
because that's prevailing doesn't mean that the seller has to offer 2.5.
Correct.
A lot of our agents are going straight to the seller and say, look, let's be smart. The market's tightening. Let's reward the salespeople who are paid on commission and make sure they pay strong attention to your house. Let's bump the price. Let's bump the commission 0.5%. 0.5% of 400 grand is $2,000. I don't care. Take it from 400 to 402, but pay 3% to the co-broke. That's the argument I want you guys to start bringing up.
Mhm.
Right. So I just wanted to add that.
Yep. So we see from last week to this week on the pendings, there were 173 pendings. Now there's 174. Of those pendings, 49% of them are offering under 2.5%, 30% are offering 2.5%, and 20% offering 3%. So this would be a good
That's
graph
climbing.
to show that the pending contracts, we have a higher percentage of them offering 3% than what's active, which could be a sign that the sales associates are incentivized to sell the 3%, so a little bit more. And there could be just a little bit of a trend there. Then looking at the solds, there were 535 total sales last week, and there are 500 or last week for the previous 6 months. Now for the previous 6 months, there's 528, not a major decrease by any means. It's just over 1%, not a huge.
Well, you're not at the end of the month yet. When you hit the end of the month this month, that'll,
We'll get a few more and we'll see that. 13% of those, so more than the actives, were offering 3%. Only 32% offering less than 2.5%, with a much higher significant number of the actives and pendings offering less than 2.5%. And again, that could be just an indicator for you to stand up for your value and say, look, there's a lower percentage of homes offering less than 2.5% going under contract compared to what's available. So
well, let me make a bold statement there. Do the good agents like to work for low money?
nope.
No. So who works for low money? Bad agents. So bad agents don't get deals closed. Bad agents work for less money. So good agents actually get their deals closed. That's all I'm looking at.
Bad agents, bad agents. So of the sold properties, 42% of them were offering 2.5%. So that's kind of along with that same trend. Down here, these are just some overall stats. The average days on market for the active properties are 35 days. So that's again telling me that some people are pushing price based on their condition and motivation. They're pushing that price and they're not selling. So the average days on market is increasing for those properties. But pending days on market is 9, which says that they are still selling fairly quick for the properties that are priced right, in the right condition, with the right motivation of the seller. They are still selling fairly quick in 9 days. And for the sold properties, 17 days on market is the average days on market. Compared to last week, the list price to sales price ratio is still about 100.4%, which means that the homes priced right with the right offering and right marketing are selling at 100% of the list price. Coming down here to the max price, none of those had changed. So no higher price properties are active or pending or sold. It's the same as it was. But the average price of the actives did drop from last week. So the average price, what is about 5 homes that are no longer active, dropped that average price from 756 down to 599. That's the average price of all the actives on the market. I'm
Let's
sorry,
talk about that too.
I'm sorry, 821 to 756. I was looking at the wrong one. So the average price dropped from 821 to 756 of the actives.
Lauren said, yes, that's because the bad agents are letting the sellers dictate and not being educated on the climate. That's what I was going to say. There's been a lot of price reductions lately, and they're fairly large ones.
Correct. So
Right.
the price reductions and the 5 properties that came off market caused that average price to drop down by nearly $70,000. Then on
But remember, our average price was 400,000 a year and a half ago.
correct. Yeah. So just think of that in this market, in the Apollo Beach market, that's the average home price active is 756. And so then from last week's numbers, the average pending price was 599. Now it's 604, just a slight increase. And the average sold price did drop from 571 to 540. Average home size, 2,400 square foot to 2,300. That's active. 2,300 to 2,300 for pending. And then 2,300 to 2,300. Yeah, 2,300 to 2,250 for solds. And in the last 7 days, there have been 15 properties go active, 22 properties go under contract, and 18 properties sold in the last 7 days. So there's more properties in this zip code going under contract than there are coming on the market, which I just want to, I wanted to point this out because just because everybody's talking about impending doom, crash, this, that, and the other, we can still see that the market is moving. There's more properties going under contract than are coming on the market, which shows that there is still demand. Buyers are still wanting to buy. We just have to be a little more diligent in our marketing and our pricing to make sure that we're putting the best product out there with strong motivation from the sellers.
Couldn't agree more.
Jimmy's
Okay.
got one too. If you wanted to jump over to Jimmy, because he's got he prepared a Moxie presentation on it. If you want to jump into him since he's here.
Okay.
Yeah, what he said. All right,
So
so
Jimmy put a presentation in Moxie. That's an interesting idea. Let's see what it looks like.
hey, you know, I have to
Walk the walk.
walk the walk and talk the talk and all that stuff. So I ended up, I gotta turn this down. Sorry. I actually picked another zip code, and I just wanted to show you kind of what this looks like too. And I think when you kind of dig into using these presentations to talk about market stats, you can do this as micro, as a small community, as big as, you know, an entire
County.
zip code, communities, whatever way you want to do. And what I did to kind of bring it together is I just went after single family homes in the last 90 days in Ruskin. I just wanted to show you kind of what this can look like. And again, if you want to be able to speak to it using a presentation like this and why you're trying to talk about market conditions, actually goes a long way. Now, mine is not as good as Chris's when it comes to going week over week and things like that. But this is something that's pretty cool that if you made this, you could actually share this presentation too with any of the communities that you have so you can see kind of what's happening. So I picked.
Wait, I'm
single
sorry,
family-
Jimmy, roll. I just have to have a mind. That's Ruskin,
Yes.
520,000, 800,000, 500, 995,000,
Yep.
430, out in the country, 409. What the hell happened?
I know, right? Well, I mean, and look at this. So, and this is a very generic presentation, but as of right now, we have 47 active single family homes that are on the market right now.
Look at
Okay.
the prices in
They-
Ruskin.
Yeah.
I'm
And
sorry.
as high as $799. Average though for Ruskin right now for sale is $442,000 what's on the market.
I remember they were $75,000.
Yes. Oh, sorry. Turn that up a little more. My bad. All right. Is that good? Is that good? Is that better? Yeah. Okay.
You're
So,
good
and then
online.
average days on market is 18 right now. Square footage, only 2,000 square footage. That's what the average is. And then price per square foot at 220. And we go back for what we have pending now, we have 107 as high as 1.2 million. Obviously, there's a lot here. And this presentation did take quite a bit, but pending is actually sitting at $428,000 average and 10 days on the market. So already seeing an increase in the last 90 days from 10 to 18 days. Just
And then
in
if
the
you
past-
move your cursor over the house on the left, what happens?
Well, so this is your presentation. So let's take a look at this $1 million property. It actually pulls it up.
Slick.
Okay, we're not gonna, that's not what we're here for, sorry. But yeah, pretty cool. Let's see, so pending, we were at, like I said, 10 days average on market at $428,000. So we're basically sitting almost at a $20,000 increase from pending to what's active right now. And then if we go back to the properties, the last 3 months that have sold in Ruskin, there's been 211 as high as $1.7 million in Ruskin. In Ruskin. But then you can have obviously see that it's as low as, oh, a little bit too far. Oh no. I got back down. We're actually at about a $388,000 average would have sold in the last 3 months. So 388 average the last 3 months in Ruskin for single family homes up to active is 444 on the market. So obviously you can see that difference that we have there and how long it's sitting on the market. It kind of goes to what Chris was actually saying. So and then the cool thing again with this small as it takes me 10 minutes to scroll down it, you can kind of you can really go in here and play around and show, let's talk about the solds. You can see what averages on market looks like at 12, what the high, what the low, what the mid, what the minimum actually was.
So they're on the market at 220 a foot. They're going into contract at 208 a foot and they're closing at 200 a foot.
Right.
Interesting. And just all in the big picture.
Yep. And then it's again with some of the graphs. Some of these graphs are a little funky based on the market and how quick things are selling. This one's price versus square footage. And then this one here just kind of talks about this is price versus days on the market. So the graphs don't necessarily fall in the line on that standpoint, just because it's just like bam. But you can still see, I mean, that's pretty normal. So yeah. I just thought that was kind of cool. And this will update it in real time. So anything that closes, I should be able to use this presentation next week and see what that looks like for anything that's closed.
All right. So let me interject for a second here, because this week we're going to do a Beggins buyers class, like a next level university type of thing. And oh, you were sharing. I'm sorry. Stuff like this is what we're going to talk about. You know, we're going to get an influx of out of town buyers coming in. They want to move to Tampa. They don't know that Tampa is Safety Harbor and Oldsmar and St. Pete and Ruskin and Riverview and. So think of the education you can give. The people will get lost in that shit. What's this one for? It's like shopping on the MLS for them. Right? So you get an out-of-town buyer, you send them with a presentation like that, where it's interactive and they can click on the mouse and do their things. They're going to be blown away. So Jimmy, how long did it take you, honestly, to make that? Because that's a pretty large presentation.
I did it this morning at 6:30. I was done by 6:45. It just took a long time because there's a lot of listings, and for MLS to load and actually choose them, it took a little bit longer. Oh, and you know what? I wanted to add one other thing to it, because not only did I do that, but I went in also into Remine, took those same single family home properties, and we're talking about equity and what should what should sellers do. But in Ruskin, out of all of the single family properties that are in Ruskin, 30% of them have no mortgage.
Wow.
30% have no mortgage, and 25% have over $250,000 worth of equity. So you need a place to start as an agent. Where do you go? What do you do? And you want to work in Ruskin, we could probably work through some things where you can go after that equity to try. I mean, again, if they can, get into that equity so they can purchase another home or they can rent, whatever that might look like, but understanding what's happening in the market. And then in Sun City, it jumps up to almost 50% of the single family homes there actually have zero mortgage. So it's
Wow.
just kind of cool to know.
And they could buy a beach project from us and you can get a big commission.
Yep.
But I'm not going to segue there yet. Crystal, what do you got for us?
Good morning. I actually used my community. We talk so much about farming and really knowing what's happening in our particular area. So I used my zip code in St. Cloud, and there are 51 listings out there. And
Wow.
there's 51 listings in the 34772 zip. Two of them are at 1%. One is at 1.75%. One is at 2.3. Now I've seen some crazy numbers out there, but I've not seen a 2.3. There were 11 at 2%. 4 were at 2.25. The bulk are the majority, 28 were at 2.5%, and there were 4 at 3%. Now here's the interesting piece. I mean, because we have a whole lot of agents out here with the mom and pop brokerage firms. So if you look at the bookends, the lowest price property was $304,000, 2%. The highest price was 1.7 million, 3%. So, we can't say it enough that people they value us as agents, and the lower commission does not necessarily mean they're just trying to save money. These inexperienced agents are doing whatever they can do to list the properties. And part of my exercises, I'm working with one of my neighbors in listing their property. And it's one of those pieces where they're okay with paying the commission. They just want to move. We have a problem neighbor, so they want to move away from that neighbor. So this is good data, and it actually is helping me personally, just to make sure I know my own community.
Yeah, we don't make this stuff up. It's all for everybody's benefit, right?
Absolutely.
Julie, moving down to my second row left.
Yes, good morning, everyone. I went ahead and pulled Reddington Shores, Reddington Beach, North Reddington. Altogether, they are looking at 59 listings on the market. 28 of them are pending. We're looking at 14 days, average days on the market. And then I switched over and I pulled Indian Rocks Beach, and wow, there's a big shift happening there. They only have 35 listings on the market. 21 of them are under contract.
Holy cow.
And they're at 23 days, average days on the market. So there's definitely a big shift happening from what I pulled last week with Madeira Beach. I looked at the percentages, commission splits, and I ran across one for the dollar. HomeCoin Realty was offering $1 commission for a single family home, $860,000 listing in Reddington Beach. $1. Yeah. And then I looked and they had another listing in Reddington. They were offering a flat fee for a over $1 million listing, only $1,500 commission. I know, I couldn't believe it. So our commission, the 3%, like we looked at last week, is holding pretty steady with the Century 21s and the Coldwell Bankers. But the Keller Williams and some of the little mom and pop places are down to 2%. Even one that was down to 1.75%.
Well,
So-
they should charge less. They don't do as much.
Exactly. Yeah.
You know, if you buy the BMW 3 Series, it's cheaper than the BMW 5 Series
Yep.
because you get more with the 5 Series.
Yep.
So that's why we have the franchise to get our fees up. But we act like we dumb ourselves down like the mom and pops that don't have the resources. We act like a 3 Series when we're really a 5 Series.
Yep. So yeah, there's a big shift happening down here at the beaches. I can see it from last week. So hold tight. Things are getting complex.
I like it. Senor Diener.
Good morning. Well, I did, let's see, share my screen here. Here it is. Share. There we go. So I went and pulled South Tampa. Mine's not as fancy as Jimmy's, I'm sorry. So our active listings are 138. Now this is just single family homes. Pending 136, closed in the last 30 days, 109. So our month supply on hand is currently running 1.2 months. Last month it was 0.7. So we can see the shifting in the market. And you know, the thing we have to remember, you know, our days on market are right now about 18. Even when we had 16 months of inventory, days on market were about 42. All right. So, I mean, it's not really shifting that much, but we kind of have to set expectations of listings that things aren't necessarily sold in a day. Okay. You know, that our typical market right now, you know, is 18 days on, you know, to go to contract. That's an average. So, and that really hasn't shifted much in the last year. It's run right around 18 days in Hillsborough County. So what's shifting now is our month supply inventory. And I did like Crystal did. I did my zip code just for shits and giggles. And active, we have 24, pending 45, sold in the last 30 days was 29. So it's also running at 1.2 supply on hand. So it's
But how does that work? If you got 30 sold in the last 6 months, that's 5 per month. And you've got 24 active and we're selling 5 a month. So that should be a 5-month supply of homes, shouldn't it?
We sold 29. Oops, I'm 29. I maybe upside down that, but
I rounded up to 30 for easy math.
right, okay.
So if we had 30 sales closings in the last 6 months, that means we've closed in that neighborhood 5 per month.
Okay, I just did it for the month. So the last 30
Oh, that's
days.
just 1 month. Okay, never
Yeah,
mind.
for the last 30 days, 29 closed. Yeah,
Holy shit.
yeah,
So that would be times
And
5, that'd be 150
right.
sales in the last 6 months.
Yeah, I mean, when I look at activity, I look at pendings, but the problem is pendings can go on 45 days, right? I mean, they
Right.
don't really close. I mean, to see what's really happening in the, you know, when you look at the top one, 138 active and pending 136, 109 closed. So, you know, almost all the pendings are closing in 30 days. There's a few that are outliers that are going a little more, but that's, we're going to have to set expectations to sellers that, you know, it's 18 days is not a long time to sell your property, but it's not going to be maybe in 4 days, except if you live in Ruskin.
Right. Hey, Jeff.
Yeah.
I'm sorry, Joe, you done there?
Yeah, I'm done. Yeah.
Jeff, tell the story of the listing Dad told me about that, you know, he thought it should be in the 6s, but the sellers have flexibility in their timing. and they're going into the 8s and they're getting showings, that one. You know the details?
I do. So these are the people that actually bought our unit at the harbor. And it's a couple that we've known for a long time, or I've known for a long time. And they've got a nice house that they live in Seminole. Beautiful pool home. They were thinking maybe high 6s, 7s, and they're trying to time it because we're not going to be moving into the harbor until probably July. And so they're just they don't want to sell. They want to be displaced. So put it on the market and went through the comps, and the comps have gone out of control. They were going to be thrilled to death with like 675 to 690. And then the comps are showing in the mid to high 8s. So it's just amazing just what a couple months have done, because that was a few months ago when they bought our unit, what they thought they can get for their house. So now it's up close to a couple $100,000. It's crazy. And it's all supply and demand. It's micro market driven because that specific neighborhood is very nice and there's nothing else for sale in there. It's a nice little pool home near schools. It's a good spot. So super micro market analysis right there.
Yep. And the key there that I wanted to bring out was analyzing the sellers. This seller's not in a hurry, so they can play around on the market, and that's okay. And the house is getting activities and showings. Donna wrote, why isn't there a push by the Political Action Committee or RASM to protect our commissions? Because it's called anti-trade. You can't fix commissions. It's a violation of federal law. So even when I was on a broker summit last week and we got to a Q&A section and commissions came up and they stopped the recording just so there's no evidence of what we were talking about. So yeah, no, you can't talk about price fixing within companies or any of that. It's 100% off the grid. Mr. Bass, I think you're the last one.
I am. I'm going to share my screen with you. Last night, my teenager, who was a gamer, decided to help out with the internet connection, and it's been a little goofy since. So I'm doing this off my phone and off my computer. I apologize for the double connection here. As you can see, there we go. So I'm doing 33647, which is Tampa Palms, and that is New Tampa area. And I'm trying to do this where it's not going to be very frustrating. But what I did find is what we're looking at.
Well, we're not
how
seeing
many
your
pins.
screen.
I'm sorry.
Now it is.
Okay, good. All right. So this is the
But it's blank.
quick. There you go. Are you seeing it now?
Not yet. Yep.
Okay. So this is a quick grid.
Yep.
And then when I go to my stats, I had a little bit more ready for us, but this is a meat and potatoes of what we need to do considering my internet connection here. So there's 495 units that have had some kind of transaction, either it's active, pending, or sold. With that said, 367 were sold. You'll find here, though, the ones that are active, the market's pushed a little bit, especially for that average. They're now 37 days on the market for a lot of these, but the average price right now is 700,000. So there's a big push right now for price and volume in the New Tampa and Tampa Palms area. What I found that was interesting was pending. I mean, you're looking at 3-bedroom, 3-baths at 2,300 square foot. The list price right now is at 523. So there is a big push in that regard too. 15 days to contract for most of those. That's up because about a month ago, we were looking at 7 to 10 days. Of the sold, you'll see here that, hang on, boom. The 3.3s are also nice little push, but it's at 452 at 9 days to contract. Average days to close is 52 days. And then when you look at the mix of all of them, the sold, we did have one at 3.5 million. And the lowest was 124,000. So we're across the board as far as that spread goes. But what I'm finding here that's interesting is the sold price to list price is still in the plus. So you got at 1.23 on the max, all the way down to slightly over list price. So it seems that we're starting to see a pretty good indication that the list price and the sold price are pretty close together, but the demand is still there to where there's the average units that's being sold is still above what's being listed.
That's crazy. Look at the range. 488 is the max per square foot with a low of 116 with an average of 199. So that's actually cheaper than Ruskin now.
It's nuts, man. And this could be an outlier right here. Because I mean, you look at this, there is a community that has litigation against it on Cross Creek. And so it's keeping the prices down somewhat because you can't get financing in there. And a lot of investors are having they're not wanting to buy one once, they're wanting to buy minimum 3-bedroom homes in this area so they can really get the rent up there as much as possible with the families.
Yep. Cool. All right, guys, that's just what I wanted you to see. Every market, I think Jeff, you and Mike talked about this. I didn't see yesterday, I was flying, but last week we talked about micro markets. Every market acts differently, right? So you really got to drill in and get down to details on the ones that we know. Jeff, let's talk about junior home communities before I get to my topics.
All right, let's talk about this for a second, because I want to kind of go on the same concept as from leverage, because I want to make sure you guys are selling these things. We're selling them, but I'm going to give you an example of the Capri, right? The Capri townhomes. The Capri townhomes, I'm going to show you. Let me just do this for a quick second. I'm going to walk through the numbers on how this works, right? So Capri townhomes, these are the 5-bedroom, 4 baths, rooftop decks. They're right in Treasure Island, 1 block from the beach. I'm going to leave this screen up for a second, okay? So I want you to see what the projections are, what this thing will bring in from a rental perspective, right? So this is what we need to get better at selling. So the purchase price is $1.695 million. Oh my gosh, that's a lot of money. No, it's not. Yes, it is, right? But let's talk about what it really is, because what you're really doing is leveraging, and you're going to put down 20% of the 1.695 million, which is $339,000. So the sale is $339,000. So who has $339,000? Who has a few?
Half of the people in Ruskin.
Right, other equity, right? And if you look at who could put.
Let me just comment on that, Jeff, because that's what we were talking about.
Yep.
You guys have spheres of influence that have a shit ton of capital in equity in their homes.
Yep.
Build a relationship with Banco ZK or TD Bank or one of these credit unions and teach them how to get their equity out. They don't have to spend it. But somebody comes to me right now with a good deal, I can write a check for a lot of money because my line of credit is sitting there at 0, right? And a lot of people have that cash. And you just need to give them ideas and let them tumble around in their head for a while. And at some point they're going to, oh, but anyway, continue.
Yeah, so write this down. So the sale is a $339,000 sale. That's what I need to be able to say. Can you access $339,000?
Or can you and your brother, or can you and your sister, or you and your mother and father?
Because now you're going to leverage and own an asset worth $1.695 million. And the numbers on that one is your mortgage payment is going to be $9,000 a month. Oh my gosh, that's a lot of money. Yes, it is a lot of money, but it's going to cost you $9,000 a month, including your taxes, right? So what you're going to be
$16,250
$16,250,000
is what comes in a month. Income
is what the income is, and you have $9,000 in expenses. So you're going to make $6,900 a month. Let's say you have a management company that takes 20% of that. You're still going to come out $5,500 a month positive, right? So I don't know what it cost you to access that $339,000, but if it's sitting somewhere, it's not making you $5,500 a month, right? So what we need to be better, of course, these are all third-party projections. I'm not selling a security. We're not guaranteeing investments, but I can tell you, because I know this market very well, these things are going to bring in a couple $100,000 a year, right? And when they do, people are going to have a really nice return. So $5,500 a month cash flow average, that's a 5-year payback on all of your money. So 5 years from now, I have my entire $339,000 back that I leveraged to purchase this asset. And now I have every month somebody else paying my mortgage, and I'm positive cash flow several thousands of dollars a month. That's what we're selling, guys. That's why these make sense. So what we need to do is start to understand, I don't care where you are, that's not an emotional buy. This is a business buy. You want to buy a piece of property at the beach on the island, that's great. Holy shit.
Happy birthday.
Dean just scared the crap.
Happy birthday.
That was a good one, Bob. I'll get you later. That was good. That was really, really, really good. Broke my state there quite a little bit there. All right. So short version is sell that. Sell those, sell those, sell those. We have a couple of residences. We've got the Capris. I've sold 2 of the 7 Capris already. We only have 5 left in that whole project. And there's a lot going on. But you see how I sold this, guys? I didn't sell a $1.69 million townhome. I sold the opportunity to leverage a $1.695 million townhouse for 339 grand. That's going to cash flow over 5 grand a month after expenses, after mortgage, after insurance, after taxes. That's your cash flow. So if you guys, it's just talking, it's about having these conversations. And Mike Puma's got some great marketing pieces in Beggins Agents under the marketing hub about Capri, right? So you can actually push out this project there. So that's the latest, guys. That's what I wanted you to tell you. We have 6 residences left. That's it out of the 27 units. We're breaking ground. We closed the construction loan Friday. So this week they're starting to move the crane in to do the pile drives. We'll be on site by Friday. We're actually doing a groundbreaking ceremony with the mayor Friday morning. And so that's the residences is moving. Same thing with Azul's about to break ground. There's one resale in there for 1.75 million. And that's what's going on. The Pelican houses are the same concept, but just double the number, because the Pelican houses are selling for 3.5 million. So you have to have $700,000 down, but the payments are going to be double that. And we have 3 of those sold already. We got 1 left of the Pelican houses. So guys, the point is, I want you guys to be able to have a conversation about leverage. And it doesn't matter. Notice it doesn't matter what the market's doing. I don't care what the market's doing. I care that I'm bringing in a couple $100 grand a year on my investment on cash. I'm not concerned about ups and downs in the market because I'm buying a cash flowing real estate asset. And that's the difference. That is going to be insulated through the ups and the downs. We've already proven it's the last to go down, the first to come back. That's why smart money comes to the beach. Last thing from the Marriott project, I met with the architects last week. It was just phenomenal the way this thing's coming together. And should be by next Tuesday. I should have some other great little tidbits to show. We're not ready to launch yet, but we will be probably within 2 months, be able to start taking reservations on those 160 units right here. They're going to be spectacular. So always go to thebeachprojects.com, guys, is where we have all this information. And when you have a customer, reach out to me because I will jump on the phone and close with you. And for you, get a Zoom, get a phone call. So sell, sell, sell. Let me know what I can do to help.
Jeff, how many buyers are buying in groups, like a family trust or 2 neighbors getting together?
I'd say probably 25% of the buyers
Okay.
are grouping together and forming an LLC, and a couple.
Well, that's what you and I are doing, right?
Yeah, you and I.
We just bought a residence together, and there's a lot of cash. I put up a little, you put up a little, and now we got a unit.
That's right. That's right. And a lot of people forming LLCs. I think one of our agents has 3 friends got together and formed an LLC together, and they're buying one. And that's how it works. So, but the point is, and it spreads out your risk, right? So now you don't have to come up with $339,000. You get 6 guys to put up 50 grand, and now it's a lot easier. So at least you can have a conversation. Maybe it's a post. Hey, is anybody ever interested in buying a beach house? I've got a property. Maybe we can all pool some assets together. Hit me up, send me a DM if you guys want to chat about it, and have a conversation. Set up a Zoom with me. I'll help you close it. But take advantage of this, guys. This is as insulated as it gets from the marketplace, and that's why we're focusing over here.
Love it. Okay. Did we finish our manager updates? Did I skip anybody? Nope. Everyone good. We're on track. It's just a repeat from last week. The predominant rate in Hillsborough, Pinellas is 2.5. Predominant rate is 3% in Sarasota, Manatee, and it's 2.5 in Orlando Metro. So that's it. This is just a stat from last week. I just like to. Here's my meat. Do this now. I'm just going to keep this up here until you guys get it because the leads are coming through. I'll show you that in a moment. All right, Jeff, before you sign out, I should probably fix my typo. Wednesday, listing productivity school. Right, guys, we have a prescriptive system that is going to make you win the listing. When you get a good listing, if it's not your past client or sphere of influence, you're probably interviewing against somebody else. And in that situation, you need to sharpen up and win, because we're talking about $10,000. That's a pretty big F up if you walk away and don't win. You know, that's high stakes poker at 10 grand. So let's look at it that way. And we're going to take you through. Jeff, you want to rattle off the steps real quick?
Yeah, from the listing process, we're gonna go through, this is gonna be quick, down and dirty.
Yeah, it's like an hour and a half long class, maybe.
So you get a listing lead, it's gonna say, oh my gosh, thanks, I'm so excited you're thinking about selling your house. Let me interview for the job. I'd love to interview for the job. Let me show you how I run my business. And then we're gonna go through the preview appointment, what to do on the preview appointment, the 11 questions to be talking about in the preview appointment, what to say on the preview, the listing pre-qualification, making sure you understand where the video is. How does Moxie play into this whole presentation of sending the process over and your bio and your whole process? Then we're going to go through the actual listing presentation and the SPA presentation for the quick sale, slow sale, average days on the market. And then we're going to close it. We're going to go straight through the process to make sure it becomes second nature and it's going to live in an evergreen world so you can go back and watch it over and over and over again to make sure you've drilled in the listing process. Boom, boom, boom. We're going to do the same thing for the buyers on Thursday. So everybody be there and just clear your schedule, make an appointment with yourself, 8:30 Wednesday. Every one of us needs it and you will be sharper and make more money from being there. So Wednesday, tomorrow at 8:30.
If you guys can't recite that process, you need to show up. And if you're not doing that process, you need to practice it because it really is, it's a bulletproof listing process. Cool. Team enrollment. So I certified all the offices over the weekend for individual productivity things. Team, imagine you're a team. But if anybody else wants teamwork, you got to do it by the end of June or you're going to be the status you are, which I'm not saying to change anything. I prefer you to be independent producers rather than teams. But if you want to be a team, the cutoff is June 30th. And now there's rules that I have to certify you. And if they find out that we're reporting properly, you're going to be disqualified from the award. So I think it's a good thing. Just a reminder that Anywhere is Realogy's new name. Anywhere RE, I separated the RE, so there's a real estate part, but I think Puma nailed it on the head when he said Realogy's looking at branching out into other things. So Anywhere, they'll be all real estate related, most likely, but it just gives them the latitude to move around and do different things. We talked about controlling the narrative about the market stats. Florida 21 contest. Sam is still watching for videos coming through. So we got to get one video a week for 4 weeks. So if you do that, we're going to pay for your Florida 21 convention pass. Our market is strong. I mean, we're down in units, but our sales price is up so high, it's really not affecting our volume. And I'll be curious at the end of the month to run the numbers and see if we're really still down because we're having a very good month right now. I'll save that for the last sales meeting of the quarter, which will be end of June, beginning of June. I got a couple of reports I want to show you in my inbox, which is here. Boom. We did Joe. Kathleen shared this with me. Guggenheim's Minard believes the fine art real estate will outperform stocks and sees Bitcoin bottoming at $8,000. And he goes on to say, where was that? Anyway, this is Guggenheim's one of the biggest hedge funds out there. Real estate will outperform stocks. That's big because there's a lot of people with a lot of money in stocks right now that are scared to death. Because you look at the chart and it's just boom, 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 boom. 401ks are crashing, IRAs are crashing, and people are sitting that cash and they're freaking out. They shouldn't freak out. They should stay and ride the horse they're on, because if they keep buying in, they're buying in low, and all this shit's going to pass at some point when wars stop and inflation slow down and all that. But who knows? So control the narrative. I think it's really important that we do that. I just want to remind you guys, we're pushing out some really good content. So, you know, it all goes into websites that you can go watch. I don't know if you do or you don't, but Angelique sends this out to you every week. It's a recap. Commission comparisons, market to market, hack your habits, part 2. That was a really good class Chris did. Then we had the PRS Pro, the postcard farming and mailings. If you don't do that, a lot of agents are getting a lot of business from that. And then the consequences of eliminating contract contingencies. Jimmy and Joe, I missed that class, but if I can go watch it right here. So make it really easy for you. So I just want to remind you to, do that rather than Netflixing everything. This is our ribbon performance. We have 101 agents that are registered for ribbon. And I was talking to Lauren Fleischman, and she was talking about the convention she goes to. Oh no, she was in the top agent panel, which is another one of my topics on the screen. If you're a top agent, meaning masters and above, you're invited to a special networking thing with the other master's agent. And they have a guest speaker and they teach topics, and then they break into things, which is where you get a lot of benefit and information. And Lauren said she was blown away because, they just start networking. She says, well, they were complaining they can't get their VA buyers a house. She goes, well, why don't you take them to Ribbon? And they go, what's Ribbon? Most of the industry doesn't know these things. So I think it's very impressive. We have 101 agents that have registered. We have 42 agents that have added buyers. And those 42 agents have added 70 buyers. So we've got agents doing multiple units through Ribbon now. And we've got 15 under contract. So apparently Ribbon really likes us. This is a big deal. This is their goal. They got millions and millions of dollars and they want to spend it. So I just want to remind you that's out there. And if you're not familiar with these programs, go back and watch the trainings and look at it. Ojo, which we will be learning more about. Remember, Ojo is the one that just century21.com leads that you don't answer goes to Ojo. So this week we sent 46 to Ojo and they gave 4 back. So it's been really consistent that about 10% of the leads that come in are engaging with the recipient, right? 10%. That means 90% of the time you're going to call, text, email, call, text, email, call, text, email, and they're not going to get back to you, but they inquired. But 10% of the time, they're going to say, yes, I want to talk to an agent. And that's what Ojo is doing for you. So Ojo is really your assistant who's taking your bullshit internet leads and only giving you the good ones back, right? And all of them got accepted this week, which is great, but 59% are out of compliance. And I'm going to say it again, the world is changing. It's the name of the game is kiss the ass of the app. Say that with me. Kiss the ass of the app. If you do it, you're going to get rewarded. And if you don't, you're going to get passed out. But being out of compliance is not a good thing. So I know it's a pain in the ass, but you've got to, when you make a call, a follow-up, you got to log your thing. It's just like me when I was a sales guy, I had a card box because I'm ancient. And I'd have John and Mary's name on a card. And I'd put them on Monday, Tuesday, Wednesday, Thursday, whatever date it was. And I'd pull out their card and I'd read their notes. And I'd call them, and if I got their thing, I'd update their notes on their note card, and I put it back on my follow-up box for another day based on the conversation I had. Right? This is the exact same thing, except you got to do it in the Zillow app, you got to do it in the Lead Engines app, you got to do it in OpCity, you got to do it in all those other places. And I'm sorry, but we're salesmen, and that's what we do. Follow up, follow up, follow up. This was fun. I think I have it open already. The largest the largest real estate brokerages in the US by RealTrends, which to me is a trusted source. Keller Williams South Shore, by the way, does not add on the list. Not that that's relevant, but it made me happy. So this was interesting. So Compass has done more sales volume than Realogy, which is now anywhere. But we did 150,000 more transactions. 150,000 more transactions and virtually the same volume. So Compass came in after the higher price market and they bought a whole bunch of agents that do high price stuff. And then we smoked Berkshire Hathaway. They did actually more units with us, which I didn't realize. 388 versus 376. But these are the big players right here. But then you can type in here like Century 21 Beggins. Mr. Puma, this is stuff you can market for us. Oh, come on, it works. I just probably typed it wrong. Maybe it wants caps. I did it last night at work. We're number 451. I just made it very anticlimactic. RealTrends 500, Billionaires Club, Century 21 Beggins Enterprises, number 451 out of the top 500. Who knows, management team, who knows how many brokerages there are in the United States?
80,000.
In excess of 80,000 real estate companies. And we're number 451. So I think that's something we can brag about. Mike, if you want this link, let me know and I'll send it to you. Lauren says, first time buyers, not VA buyers. I was a rock star in the breakout rooms because all the tools that we have at Beggins, all Century 21s are not created equally. Jackie sat with me last week and witnessed this firsthand. We were both shining stars. You guys are awesome, right? And, you know, pat on our backs too. Management team is awesome. And we go to figure it out, right? So if you want to know, pick another company. They won't be, most companies with 80,000, most are not going to be here, right? So there we are, number 451. I thought that was cool. Wanted to share it with you. So I can skip that. This is that top agent. So if you're in the masters and above, this is Marianne Holt. She leads the panels, and I hear they're really good, except you guys know most of it, but you'll still learn something. So when you get invited, try to attend. I did the awards information. That's all I starred for today. Good deal, Craig. Good one, training weekend. We did World Trends 500, top agent master. Yes, very good. Social, remember the social contest? We talked about that. And that's not just a contest, that's for anything. My next trip is June 6th, is the 2100 Club in West Palm Beach. So I'll drive across the state again. That'll be a good time. And I've joined the mastermind in front of that. So I'll be there on June 5th. So that's kind of cool. Then the next event after that is Florida 21, which I didn't talk to Susie yesterday to get an update, but we don't have a lot of attendees. So I want you to think about that and consider getting a room, and it's like $99 to go unless you get us to pay for your ticket because you do social hosting. And other than that, Divvy, Ribbon, Zillow Flex, Agent on Demand, Knock, Home Partners of America, Ojo, OpCity, Move Easy, Global Home USA, Next Level Resource Center, BegginsAgents.com, and Beggins Home Concierge are all unique selling propositions that I would like you guys to be able to articulate. When we have more time, because I went over a lot today, we'll talk about that. This $1 bullshit in MLS, I just want to remind you, there's a showing form. It's called a showing form in .loop under the Interactive Florida Forms showing form. This is what I want you to use when you're talking to a buyer that you're forced to show crappy MLS offered listings. Say, hey, look, I can't do this for $1. Will you guarantee that I get 3%? If they're only offering 2.5, you'll compensate me 1, and we'll ask the seller to pay for it. But you can read this little clause. I recommend you do that. Reminder, the market is complex. The market is complicated. The market is competitive. It's not crazy. Let's not call it a crazy market. Last but not least, we got some birthdays this week. Angelique Beggins on May 25th, Valerie Green on the same day, Christian Gaynor on May 26th, and Laura Tom on the 29th of May. So only 4 birthdays this week. A special week. Leads are down this week from 300 to 271. Joe, does that mean the sky is falling? No.
No.
But look, Century 21 is just crushing us, guys. 113 versus 150 last week. Reload 35 last week. That's a big number over 27. UpCity was up over 17. Walk-ins were down. Sign calls were down. Zillow Flex was down a little bit. And I forgot who's running Social Ad Engine right now, but they got quite a bit of leads on that. So interesting, we had a listing on the market long enough to try it, right? And just another note, last week I talked about we want to have some bench warmers ready to step onto the Zillow Flex team. And we don't have leads to give you yet, but as we get our metrics up, they're going to give us more. So we need to have people ready. So if you're interested in learning more about that, let us know. We'll include you in our meetings and start giving you scripts and training, and we can take it from there. And that being said, my last slide says the end. Anything else for the greater good? Happy Tuesday, everybody.